we want to think of this as a co-creation activity. So to get us started, let's just start off with some introductions in terms of who is who within the team. Alan, would you like to introduce yourself first, and then we move on to our capital partners, and then we move on to the other parts. If you may come on video, if you are comfortable, Alan, that would be most appreciated.
Great. Can you see me?
Yes.
Yes. Hi, good morning, everybody. My name is Alan Hackner. Pleased to meet you, and thank you all for joining this family meeting, as Golden put it. I am with Usaid Southern Africa, working in the Regional Economic Growth Office, and am what is called the Contracting Officers Representative for the Trade and Investment Hub, which really means that I'm the Usaid Activity Manager for the Trade Hub. I've been with Usaid for probably around about 20 years now, so it's been quite a while, quite a career working for Usaid. Cover a number of programs and projects, but have most of my career at Usaid been focused on working in the private sector domain, on activities that leverage private capital for to support development goals and objectives of Usaid in the region. Thank you.
Thank you very much, Alan, and thank you for making the time to join us today to think through this topic. So let's move on to our capital partners, starting with Warwick.
Good. Hi, Golden. How are you?
All good, Warwick. How are you doing?
Good, good. Welcome to everyone else. My name's Warwick Blamey. I'm representing Subsidy Capital and the African Trade Platform. And we've been involved in the South African Trade and Investment Hub for the past, it's over a year now. And we are on the capital provider and advisory side of the transactions.
Thank you very much. Shall we move on to Mark and your team?
Thanks very much, Golden. Just to introduce New Capital, where we sort of sit in between the capital providers like, the advisory teams like Warwick and Nations. We sit between them and the investors, people like IDF, and typically play a matching role, a bit like a Tinder for African capital. So our role is to find the right investors for the right deals as quickly and as easily as possible, and thereby help facilitate the process that Usaid is promoting. I'm joined by Barry, who has a very strong banking, management, consulting and valuation background in equities, and Gordon, who is leading this transaction and the relationship with Usaid, who has a very strong debt and real estate background, and so that's our team, and looking forward to engage today. Thank you very much.
Thank you very much, Mark and colleagues. You're most welcome. Do we have anybody from Nations Capital yet, Hans and Nick?
Yes, we do. I think Fungai, if you're available.
Yes, please go ahead and introduce yourself and your organization.
Yes, thank you, Nick, and good morning, Gordon, and good morning, team. My name is Fungai Chitungo from Nations Capital. We are also quite glad to be part of the family. We have been working with the DAI team for over a year in our capacity as transaction advisors, wherein we've been trying to advise and put together the capital seekers, that are seeking to benefit, from the program. Thank you.
Thank you very much, Fungai. Are you with anybody else from Nations Capital, or are you on your own?
At this point, I'm on my own, Golden. Thank you.
All right. Thank you very much. Do we have anybody from IDF yet?
Yes, I think Pokwani has just joined us.
Hi, Pokwani. You are most welcome.
Good morning. Good morning. Thanks, Golden. Good to see you again.
Yes.
And seeing familiar faces. It's been a busy week of us seeing each other. I am Pukwane, an investment principal at IDF Capital. I work on the Usaid mandate with my colleague Simbisai. I think she's got exams this week, so she may not be be on the call. IDF Capital in the main manages funds that invest in South African entrepreneurs, but since 2019 we closed a fund that allows us to invest in few other Southern Africa countries, Zambia, Lesotho, and if anyone can solve how we can do investments in Zimbabwe, we are keen to look at one or two opportunities there as well. And of course, we are in this conversation with Usaid Trade Investment Hub through the Alithea IDF fund mandate that allows us to be a capital provider in Lesotho and Zambia in the main. I look forward to this morning's engagement. Thank you.
Thanks a lot for joining us, Pukwane. I know that you are having another session, team building session, so thank you for prioritizing us. I'm sure they can manage without you for today.
Of course. Thanks, Golden.
Thank you very much. You're most welcome. Let me ask George to introduce the staff that are in the meeting. Or Nick, are you going to do that?
Golden, just before that, I think we got NetCampus on board as well. So Leon.
Oh, I see. Thank you very much. Yes, please, Leon, please introduce yourself.
Sure. Sorry. Good morning. My camera does not seem to be available, so it doesn't look like I can show myself to you this morning. So Henk is showing himself.
Okay.
But from a NetCampus perspective, Gordon and Nick and team, thank you very much for inviting us to this session. As Nick said, we are from NetCampus, the education partner that has teamed up with Usaid Hub in order to provide the training modules for the financial services. And we are very interested in hearing the outcome and the discussion of the discussion and the outcomes taking place today, and to see how we can further support you in going forward.
Very much, Leon. Henk, do you want to say a few words? You're on mute. You're still on mute, Henk. Can't hear you.
There we go. Apologies, we're sitting in the same office, so I just have to make sure that there's no echo. Okay. Yes, I'm Henk. Like you all know, I've been interacting with most of the delegates around the table, virtual table this morning. And yeah, we've been building the solution so far, and we are looking forward, like Leon said, to getting the feedback, but also to see what the way forward can be so that we can partner sustainably with the various partners around the table, because we are in for the long haul, like we all know. Thank you.
Thank you very much for joining us. You are most welcome. Nick and Hans, can you please introduce the staff by the different clusters, starting with yourselves, of course.
I'll go first. Thank you very much, Golden. My name is Nick Christoforou. I work with the Usaid Trade Hub, and I look after as a finance and investment advisor. Beg your pardon, move to my camera on. As our finance and investment advisor for our countries, Botswana, Namibia, Malawi, and South Africa. So Hans, an introduction, and we'll speak to the others.
Thank you. Good morning, everyone, and thank you for joining us with in this family meeting. My name is Hans Badiamjura, based in the Pretoria office as finance and investment advisor, covering Mozambique, Lesotho, Eswatini, and Zambia. I'll probably hand over to Peter. Peters.
Peter Manda in Zambia, are you there? Okay, let's move on to Eswatini. Is that Tammy?
Good morning. I am Tammy Dlamini. I am in Eswatini representing the Usaid Trade Hub. Thank you.
Thank you. Let's move on to Mozambique. Okay, you have lost your chance. We move on to Lesotho.
Good morning. My name is Marina Bizabani. I'm the Lesotho country representative, and I'm based in Maseru.
Thank you very much, Marina. Let's move on to South Africa. Whom do we have in South Africa? You're on mute, course.
Good morning, ladies and gentlemen. My name is Cosmas Mamunze. I'm a portfolio manager for South Africa.
Okay, can you introduce everyone else who is with you in the cluster?
Right. So in the cluster, there's Doreen. Doreen.
Good morning, everybody.
Who is also a program assistant.
Good morning, everyone. My name is Doreen Sidibe. I'm the portfolio specialist under the SA cluster. Thank you.
Yes, Sepiso.
Thank you. Good morning, everyone. My name is Sepiso Tefo, and I'm the program assistant for South Africa. Thank you.
Thank you very much. Who do we have next, Hans?
I think we can move over to Botswana.
Okay, yes, Botswana, please head it, and Francis. And
morning, everyone. I'll kick off for the Botswana, Namibia, and Malawi cluster. I'm the portfolio manager for the cluster, supporting the teams in those countries. Gerrit, are you here?
Hi, good morning. My name is Gerrit Strauff, and I'm the county rep for Botswana. Thanks.
Degree is on leave, so I don't think we've got anyone from Malawi unless Nelly is here. And then we don't have a country rep in Namibia at this stage, so it'll just be the two of us, I think. Thank you.
Thank you very much. We are good to go in that regard. Peter Manda, are you available?
For a couple of minutes, yes, Gordon. So I'm Peter Manda. I'm the country representative for Zambia. Thank you so much.
Okay. Are you with anybody else who needs to be introduced?
They're around the office, but busy with something else, so that's fine.
That's all right. Thank you very much. Do we have anybody from the comms team?
Good morning. Good morning. I'm Mamusa Makaya. I'm the regional communications manager at the USAID Trade Hub based in Pretoria. Thank you.
Thank you very much. Thank you very much, colleagues. I know that it takes a long time to introduce people on a virtual platform, but because our capital providers normally interact with Hans and Nick, George, and myself, it was important for them to also meet the other colleagues. So thank you for bearing with us as we did that. So to get us started, we want to have this meeting on the back of having started working together for about a year now. And during that period, a lot has happened. We've had the pandemic, and we know that our region was hardest hit across the continent, with 44% of all the total caseload being in Southern Africa, and the lion's share of that, 98%, in South Africa. So clearly that had an impact in terms of the economic performance of our region. If we look at the overall performance of our region, according to the African Development Bank, we witnessed a 7% contraction of our region, with a projection of 3.2% growth in 2021 and 2.4% in 2022. When we compare our regional performance, economic performance against East and West Africa, we can see that our region was hardest hit because the other two regions, East Africa, had positive economic growth, even under COVID conditions, which is also a reflection of how much they were impacted by COVID. And one of the key issues that arose from the pandemic is the need for digital acceleration, which in a way allows us to now use that as a mechanism for the fourth industrial revolution, but more importantly, for integrating a lot of unemployed people into the labor market, given the huge youth dividend within our region and continent. And as the Usaid Trade Hub, we believe that economic growth rests on promoting increased export competitiveness of firms. But for the firms to gain that competitiveness, they need to adopt technologies. They need to attract investment. And this is where the part about promoting investment from South Africa to the rest of the region comes in. And in that regard, we know the structure of our private sector in this region. When we take out South Africa out of the equation, a lot of the countries that we operate in, if not all of them, Botswana, Eswatini, Lesotho, Malawi, Mozambique, Namibia, and Zambia. If we take the 10% large businesses out of the equation, what remains is a plethora of small and medium enterprises, a lot of whom exports are a first-time activity. And their demand for capital really is expressed in the form of trade finance requirements, long-term debt, along with financial literacy, and a few of the players requiring private equity. So in that regard, we then had to design our interventions to really respond to that market reality. So it's a market that requires small deal sizes. But the current ecosystem of players, when we did a co-creation workshop in 2019, we brought together various capital providers. We also brought together various capital seekers to understand how the supply and demand side of the ecosystem was interacting. And we immediately realized that there was a gap in the connection between demand and supply. In particular, the demand side in terms of the capital seekers were struggling, one, in terms of understanding how to access capital, two, how to prepare themselves to get ready to meet with the capital providers. So in that regard, we had to respond by appointing transaction advisors who could work with the capital seekers to prepare them to make sure that, one, what they are putting before the capital seeker providers is credible enough to attract their attention, and separate really the wannabes and those that actually have viable business propositions to put before capital providers. The second aspect to the demand side was about helping the firms through financial literacy. And this is where our work with NetCampus comes in terms of just helping the business owners to sharpen their pencils and get ready to interact with the capital providers. Then on the supply side, we then had to look at, out of the ecosystem, who are the capital providers that demonstrate innovation and an appetite to service the market segment of export firms that we work with, that have an interest to export, but also to grow their businesses. So that meant naturally trying to push capital providers down the market segment to ticket sizes of anything between $100,000 to $5 million. A market segment that is really underserved, but one that holds promise if capital providers find models that can work in that market segment. So in that regard, we appointed or partnered with capital providers that offer different models. On one end, we have the model that Mark was talking about, where we are working with a platform business model which matches capital seekers and capital providers and enhances the way they connect in a way that reduces risks on both ends. On the other end, we have the IDF model, which is really focused on women-owned and women-managed enterprises. And thirdly, we have got the SafeVest model, which is a combination of a platform-based trade platform linked to a capital provision model directly through SafeVest itself, but also attracting other players. So in today's meeting, we want to reflect on these different models and share the experiences. I deliberately say this is a family meeting because it's a meeting amongst friends where we can be honest, where we can put the cards on the table, and where we can reflect and see how we can enhance how we do business. So in short, this is what brings us together today to have this discussion. Before we go any further, let me invite Alan to give us a few remarks in terms of why improving the ecosystem for financial service providers is of importance to USAID and where this work fits into the broader envelope of the work that USAID is supporting in the region. Alan, over to you, please.
Thank you, Golden. I just want to provide a bit of, I think, background and context and overview to the work that USAID has been doing over the last 15, 20 years or so to leverage private investment to support development objectives across the globe. I think, typically most of USAID's programs have been around providing grant funding or technical assistance support and working directly with investors, and the private sector has more recently become a part of the norm for USAID. But it's taken a while to, I think, get traction, and a while for USAID as a development agency to recognize the important role that the private sector and investment plays in achieving our development goals and objectives. And so I just want to lay out, I think, some of the tools and some of the mechanisms as well that USAID uses to support private sector investment more recently. I think we all know that increasingly private investors and businesses are looking to emerging markets for better returns and new market opportunities. And USAID is able to leverage its resources, such as credit guarantees, technical assistance, catalytic funding, and its convening power to help raise the awareness of investment opportunities, lower the transaction costs, and mitigate the risks of investments that generate positive social, economic, and environmental impact in the Southern Africa region where we are and across the globe. I think the predominant tool that USAID has used has been the use of its credit guarantee facility. to encourage and support private sector investment into the sectors where it has an interest, across the range of sectors from small and medium enterprise support, health, education, agricultural development, infrastructure support. We've used this credit guarantee to support investment across these sectors. Our credit guarantee used to be known as the Development Credit Authority, used to reside within Usaid. That now has shifted into, I'm sure you're aware, a new development agency called the Development Finance Corporation. But essentially, Usaid still has access and utilizes this facility. And I just want to give you a sense of, some of the live guarantees that Usaid Southern Africa currently has in use. One guarantee we have is a guarantee currently with Absa Bank. It's a $28.6 million facility to support Absa Bank's lending to small and medium enterprises. The second guarantee facility we have is a $20 million guarantee facility with Katie's Life through its Inyorsi Capital Fund. Again, it's to support non-bank financial intermediaries on lending into small and medium enterprises, as well as directly to invest into small and medium enterprises. We have another guarantee agreement with the Industrial Development Corporation. This is a $200 million facility to support investment in clean energy and renewable energy projects. And then a $10 million facility with a fund called Kingston Capital, which is invest both debt and equity into tech startups and small businesses in South Africa. The credit guarantee can be used in a number of different ways. It's a very flexible tool. We can do straight loan guarantees between a lender and a borrower. We can do portfolio guarantees, which is our predominant use of the guarantee, where the guarantee will be used to support a portfolio of investments that a lender will make into a particular sector. And we can also do bond guarantees. The Development Finance Corporation is now also able to provide other tools, such as direct debt funding to projects or to funds, as well as equity funding. So we're able to move beyond just providing credit guarantees to also providing these other kinds of support tools to help catalyze investment into the projects we wanted to support. Catalytic Capital is a new tool that Usaid is just starting to explore and to experiment with. And it's a tool that Usaid and other donors and philanthropic organizations use to mobilize additional investment dollars for high impact opportunities that otherwise would not participate due to a range of barriers that investors face in developing and emerging markets. Commonly, Catalytic Capital takes the form of the first loss tranche, which improves the risk-return profile for investors or a fund with a strong potential for impact, but that is perceived to have high risk. So in the case of a first loss, an investment, if there is a first loss, these are partially or fully absorbed by the first loss tranche, depending on the size of the facility. Usaid can also use Catalytic Capital in the form of funding a portion of investment vehicles' operational costs, such as personal, legal, or other advisory services. And so this form of catalytic contribution may allow for the stand-up of a new innovative funding vehicle, lower the fund's management fees in order to attract investors, or scale up a new model into a new geographic area or sector. By bringing investment dollars to high impact opportunities and supporting the development of these funds and other investment vehicles, Catalytic Capital can significantly deepen local financial ecosystems access to finance. So just a couple of examples where Usaid Southern Africa is currently utilizing catalytic funding or blended finance to leverage and crowd in investment into these new sectors. We've recently awarded a $2 million first loss facility to the SA SME Fund, which invests in it's a fund of funds which invests in venture capital companies across South Africa, and we've done this on a pari passu basis, where we've come in with a $2 million first loss, together with the SA SME Fund, for them to raise a $40 million fund of funds to invest into the venture capital sector in South Africa. We've also awarded 4 new projects using grant funding in different ways. One is to Creative CFO, which is also looking to raise a new fund in South Africa, Endeavour South Africa, Linear Capital, and Third Way Africa, which is a new fund in Mozambique. So we are testing new ways of using grant funding in order to work with investors and funds across the region. Another area where we are using our funding support is to support the Prosper Africa initiative, promoting two-way trade investment between the US and Africa. And there we're working with transaction advisors to identify investment opportunities across the region that are looking to raise capital and to link them with US investors who are looking for new markets to invest in. So just to give you I think a broader sense of the scope of work that Usaid Southern Africa is doing in this space. So whereas the Trade Hub is very much, and where all of you are very much playing in this space, focused on investment to promote trade, we are operating at I guess in terms of a wider context, in terms of using our resources to support our broader development goals across the region and across the globe. I'll leave it there for now, and just I guess there'll be questions, and there'll be opportunity for discussion around how some of these tools may be used as well to support the work that you're doing. But that'll be part of the I think the objectives of the workshop, to have that conversation. So thanks Golden, and
thank you, Alan.
I'll hand it back to you.
Thank you very much, Alan, for laying out the various tools the USAID is using within the region, and examples of some of the initiatives that you are implementing. as USAID within the region and where they overlap with what we are trying to do within the USAID Trade Hub. Clearly, you are handling a very large portfolio, one that we think will bring synergies to the work that we are doing within the USAID Trade Hub. So let's take a couple of minutes to see if there are any comments or questions based on the opening remarks. If the question or comment is to do with how do we access the facilities, may I suggest that we save it for later? But for now, let's ask clarification questions to Alan if we have any. So the floor is open. If you can indicate that by raising your hand, that would be most appreciated. Yes, Warwick, please go ahead.
Perfect. Just a question around the guarantee with, was it IDC as in the Industrial Development Corp here in South Africa? I just wanted to clarify that.
Yes, Warwick, that's correct.
Okay, and is that solely managed by the IDC with the applications have to go through the IDC, or is USAID co-managing it?
So the way we work with the guarantee facility is that we would enter into a guarantee agreement with a financial institution or a lender, and then we do all our due diligence on their systems and investment decision processes, and then we step aside. Okay. So we don't get involved. We would set out what the parameters are for how the guarantee may be used in terms of who the beneficiaries would be, but then we don't then get involved in the underlying decisions around who they would invest in. They would use their normal investment model.
And Alan, was that purely was it energy? Did I hear correctly? Green.
That's correct.
Okay, perfect. Thank you very much.
Thank you for that, Warwick. Mark, I see you have your hand up.
Thanks very much. I appreciate that, Golden. Alan, I suppose the question really is just you're playing a coordinating role. I mean, we see quite a lot of different initiatives around USAID, from Prosper as an example. We deal with DFC. So we see quite a lot of those. So there's a golden thread. Are you the person who sort of pulls that golden thread or guides that golden thread between all of the different initiatives, or have I misstated your role?
So not on all these initiatives. So Prosper Africa really, is an approach which all the different US government agencies are implementing. So and currently there's a Prosper Africa Secretariat that has just recently been set up in Johannesburg, but it's operating out of Washington. So they will run their own programs and activities. USAID will design and develop its own activities separately, but to support Prosper development goals and objectives. We will engage where it makes sense to do so. So the Secretariat may pass on transaction and deals to USAID where they come across something that fits, where they're aware of that fits within USAID Southern Africa's development goals, and we will pass things on to them where it falls outside of our specific mandate, but we think it is something that Prosper should be aware of. And so we have these, what are called the deal teams, which you probably are aware of, where each region or country will have deal teams where the different development agencies will meet and will discuss transactions that fit within the Prosper goals, and then you know, there will be, you know, decisions as to who should take those transactions on, or, you know, whether or not, you know, agencies can work together on certain transactions. But we do play some convening role, but we're not playing like the coordinating role across all these agencies.
Thank you very much for that, Mark and Alan. I don't see any new hands. Warwick, your hand is still up. Is that a follow-up question?
Sorry, I've lowered it.
No, not a problem at all. If there are no further questions, I want to thank you once again, Alan, for the opening remarks and setting the scene. So let's now shift gears and get on to the discussion. So I'll be posing questions, and you can indicate by raising your hand, or if you don't, I will pick on you. I apologize in advance to our capital provider and transaction advisor partners, but I'm sure we won't get to me having to pick on you to speak. I'm sure you will have responses ready. So my first question really is about when the Usaid Trade Hub invited you to partner on this journey to provide capital to export firms. How is the work that the Usaid Trade Hub impacted on your business models in terms of targeting this particular market segment? So let's start off with the capital providers, then we move on to the transaction advisors. Mark, can I pick on you to start? And then we go to Pokwane, and then from Pokwane we go to Warwick.
Well, I'm going to delegate to Gordon to comment on that, but I will say we have, just before he speaks, is that we have enjoyed the ability to work in a completely different community or economic community, and the credibility has been good to work with USAID. But I don't know, Gordon, if you'd like to answer that a little more fully or differently, that would be good.
Okay, no, with pleasure, Mark. Thanks very much. Thanks, Golden. Certainly, you know, as Mark would have said out at the beginning, our typical target was between $5 million and $50 million. So when we approached the exercise, we were obviously very enthusiastic, but there was a bit of intrepidation that perhaps we would get blitzed with a lot of small deals. We've been delighted with the deals that we've actually received from the Trade Hub. And you know, we certainly think that you've appointed your transaction advisors very well. We had the pleasure of working with Botswana on a call yesterday that was potentially tricky, but there's definitely a deal there somewhere. It was great to work with you on that deal. But generally what we found is that we have had deals coming through. And just to give you an example, one of the deals that was actually given to us by the SATI Hub, you know, we launched it in January. Within 8 weeks, or within 10 days, we had roughly eight clients in the deal room already, and we distributed it to about 35 investment houses. And it's 2.5 months later, and we've actually got 7 term sheets. So, you know, it's a great testament to the quality of deal we actually did get from the Trade Hub, and also just the process and how well the process worked. It was also a good opportunity for us to try our processes out and to test them in the market. And certainly what we found is, you know, when you can attach the USAID Trade Hub brand to your offering, it certainly perks attention up, and the financial institutions were generally quite eager to look at the deal. Also, it was presented very well. So the other thing that's happened is that it certainly prompted Mark Berry and I to look at our business model and perhaps to look at, you know, we do $5 to $50 million. And there's very specific reasons why we do that. Those bigger scale deals, because it's often difficult to make money out of the smaller deals with our model. But it's forced us to look at our model. And, you know, recently Barry did a deal with the group that does invoice discounting in Africa that actually fits quite nicely in the model. And I think the total facility there is roughly $2 million. So we're looking at our model, we're looking at our technology, and we certainly intend to extend it or to tweak it to be probably a bit more inclusive. So for us, it's been a wonderful experience. We've enjoyed the relationship with Usaid Trade Hub. They've been patient. You guys have been patient, and we've certainly been impressed with the transaction advisors that you've appointed. And whilst we haven't had a lot of deal flow from the transaction advisors, it's probably a function of their new relationships. We all like each other. The start was a little bit late. Last year was a tricky year with COVID, and it was also an election year in USA. It was just a dreadful year. So this year was a bit like a starter's gun going off, and we were 2 meters behind. But yeah, it's been a wonderful experience so far. And certainly we've enjoyed the referrals that we've received by Usaid. Anything else?
Thank you, Gordon, for getting us started on that, and good to know that you are rethinking your business model to see how you can accommodate other ticket size deals, but also the nature of the deals that are coming your way, that they are attractive enough. We'll hear a bit more about that from the transaction advisors. So thank you very much for that. Pokwane, can I come to you with a similar question in terms of how your interaction with the USA Trade Hub, early stages as it is, has impacted or potentially is impacting your business model?
Thanks, Golden. I think we have had very good interactions with the team, I think, for both parties to find each other and align in terms of our objectives and what we are both trying to achieve. Obviously, when the conversation started at a much broader, say, IDF Capital relationship, it became evident that the best executing partner, if you like, for USAID would be the fund that I'm looking after, the Alithia IDF Fund. So I think USAID had to somewhat compromise on some of the markets that we will not look at simply because of our narrower geographical look. So we, the USA team, had to concede on the fact that we could only focus on Lesotho and Zambia. But obviously, from a relationship point of view, for us as the Alithia IDF Fund, it is a very good pipeline development partnership. And because we started deploying capital last year, and we have interacted in both markets, Zambia and Lesotho, we come across a number of enterprises that could potentially be good investment opportunities for us, but they have not packaged themselves well. So we are seeing an opportunity to really understand the offering on the transaction advisor side of things. I think it's an area that we haven't very well understood as to what would be the expectation. And I say that because I would have interacted with two opportunities that had the USAID advisor interaction. So I don't know at what point you leave that sort of the advisory mandate. So I would have interacted with, say, a teaser, a 5-page teaser on each entities, but that is just the beginning of the conversation. So as you start being a little bit more detailed, I have seen USAID being distant from that conversation. So that's one of the things that I would like to have a better understanding in terms of how far does the advisory mandate go in terms of supporting the SMEs in this engagement. And I think another area that is quite key and have not been fully exploited and works for us as a fund is that we are actually looking for opportunities that lends themselves well to exporting, be it exporting to South Africa or being able to export to USA or Europe. So that part of the USAID benefit needs to, we need to work well with it. So there are opportunities that we are looking at that they are able to export. But again, we have not been able to fully engage the process and leverage your networks, your relationships to clearly articulate what those export opportunities look like, and possibly even use your networks in making sure that that those export opportunities materialize. So there is definitely a lot of opportunities. And I think when I was listening to Alan mentioning all sort of guarantee facilities, it also made me aware that we are also not leveraging other facilities that are in place. So if you are investing, because we are a private equity investor, it is always good for us to leverage commercial facilities for things like working capital for your scale. So if we know that some of these financial institutions are supported by a guarantee facility from Usaid, it's an easier conversation. So I think that for us, there's still a lot to learn and a lot to leverage, because I think we are just at the tip of the iceberg in terms of what is the potential of this relationship. And I think, it might have created, one or two frustrations maybe on my side, because I'm a transactor. So I tend to be a lot more excited and a lot more active when I'm interacting with an actual investment opportunity and not just a conversation. But I think there is potential to leverage, and I think it would serve us well to understand fully what each party's role is and how do we leverage and where do we go and what do we ask for as we engage all this investment opportunity. But you really serve as a good partner for us from on the ground in the markets that we are not, and providing that advisory support that some of the SMEs that are good for us lack the ability to package themselves. So we're looking forward to understanding and working better and really leveraging your network and to the best to benefit the companies that we are looking to support.
Thank you very much, Pokwane, and your points are well noted. There are a number of cousins in the family that you have just been introduced to that you need to understand a bit more. That's very useful. I'm sure the discussion will evolve in terms of making that happen. Warwick, over to you. What is it meant for you?
Perfect. Thanks very much, Golden. I'd like to start off, I think I share the same sentiments from Gordon's side. We've loved the journey so far with yourselves over the past year or so. From a patient's perspective, we really appreciate the way that the team has gone about the process through the journey. It's helped a bit from our side with regards to trade finance, from where we started off, thinking that we're going into a process which would be your vanilla commercial trade finance transactions, deals that were ready for markets, buyers and sellers already linked up. We've obviously realized that there's a bigger requirement for the pipeline that's coming through from Usaid, where there's a big need for that step before your commercial trade finance comes in place, which is your purchase order supply chain finance, in order to capacitate the entities within sub-Saharan Africa to be able to acquire that product and actually get it ready for markets. So going to our business model, the question that you're asking, but we are in the process of adapting that, as you're aware, bringing in various guarantees to structure a product offering that will allow us to capacitate those businesses that are requiring that purchase order supply chain financing, which would then enable us to convert that product onto the vanilla accounts receivables lines once that product is ready for market. And it's that interaction that that we've been having with yourselves, with the team, and to actually create that and actually make it happen, which is extremely positive and enlightening from our side. So it's we're happy with the progress that's being made, and I think we're definitely moving forward in the right direction.
Thank you very much. A follow-up question to you while you have the floor. You wear two hats as a transaction advisor, as a capital provider. How have the two worlds interacted in this relationship?
Yeah, no, it's a very good question. So if you look at our hat from a capital provider perspective, we originate from a private equity structured background where we look at direct investments into companies within sub-Saharan Africa. It's mandates. It's with the deal pipeline that we've got from Usaid. Haven't always met the group mandates, but that's as par for the course. It's from just the way that we invest from our side. A lot of the entities that we've been looking at are small to medium enterprises requiring various forms of finance. But we've also now looked at remodeling the way that we actually look at those enterprises from a direct investment perspective, where, for an example, we're now changing our focus to more of an assets-based fund, where we're funding the actual assets of the business versus funding direct equity or loaning the business's funds from a debt perspective. And looking at more from an asset-based perspective, which entails different risks from an investment side, where if you've got a structure whereby revenue can flow through, for an example, the African Trade Platform, and you've financed the assets on the back end, you've now got control over that revenue flow to service the debts for the asset side. So it's a different way of looking at direct investments from a capex perspective into these businesses. So that goes back to the way that it's in that process of remodeling the way that we look at investments versus where we actually started off right in the beginning. So there has been a lot of panel meeting that's been going on to adapt to the current circumstances, the current pipeline, and the way that we look at the actual investments.
Thank you very much for that, Warwick. So I'm told by the program director that we have to take a 10-minute break at this stage for a leg stretch and whatever else people do on a break. So when we come back, I would be picking up on the same discussion with Nations Capital as a transaction advisor, and then also shifting to Net Campus. So if you allow me, let's take a 10-minute break and reconvene at 10:10. Thank you very much, colleagues.
Okay, thank you.
Thank you.
Welcome back, colleagues.
Thank you.
So we'll just give the other colleagues a minute or two, and then we restart. Okay, colleagues, we restart now. And as I indicated, we'll restart with Nations Capital. Fungai, are you on board? Hello, Fungai? Okay, if Fungai is not yet on board, do we have Leon from Net Campus? Okay, lights out. In that case, the show goes on. We proceed with the other colleagues in the absence of Nations Capital and Net Campus. Let's move on to the next set of questions. In the work that you are doing, if I may start with you, Warwick, you have come up with the African trend. Hello, is that Fungai?
I was on a mute. Sorry, I don't know if I can still have my slot.
Yes, you may. So I would like to find out from you as a transaction advisor what it has been like and how that has impacted your business model working in this market segment. Go ahead, please, Fungai.
Yes, thank you so much, Gordon. Yeah, first of all, I mean, I would like to say we've had a fantastic relationship with the Usaid Hub team. Led by hand that we've had with yourself.
Maybe you can drop the video.
Come again?
We may drop the video. The network seems to be failing with the video on.
Okay, let me try that. I hope it's better now.
Yes, please go ahead.
Yes. So I was saying, first of all, we've been pretty much excited, I think, with the team that we've been working. with from the Usaid Hub team headed by Nick and Hans, and obviously the interaction that we've had with yourself, Gordon and George, in some of our meetings. We must say, I think the team has been very supportive. Obviously, to a greater extent, keeping us on our toes, with regards to the deliverables and everything. But it has really, changed how we work, under pressure, how we, try and get, through, with the deliverables. But more than anything else, what has also come through in the process is that, this assignment, it has opened up, a lot of, our markets. As an example, before we started, working on this assignment, we had presence, I think, in some of the regional countries, but to a very lesser extent. Now we are talking about a lot of transactions in 7 regions, some of which we have not even worked from. So I think it has really opened up our reach to the market. Obviously, if COVID was not here and we were traveling, I think it would have been even worse, from a market networking and even, generating more businesses from those regions in the process of delivering our assignment, under the USA hub. So really, I think that has been one of the major spin-offs, that we've seen from our side. But the other also important one, even with regards to the assignments, that we embarking on under the USA Hub, you'd find that in as much as some assignments or most of the assignments are within the scope of the work, that is under the program, but we tend to also originate or end up being assigned, to do extra work or extra assignments, over and above, the scope of work. So that is also bringing another additional line of revenue, for our work, and also just keeping us busy and growing our business. The last aspect is also the fact that we have not been doing a lot of small deals, from our side. Why? Because they are not normally profitable. The amount of time that you spend on a small deal is the same amount of time that you spend on a larger deal. Whereas, the benefit that you get, from a larger deal is higher. So we tend to focus on larger deals and not do small deals. But with this program, we have, customized ourselves and be able, to structure ourselves to work profitably, with small deals. And one thing that has made that possible is obviously the fact that these deals are grouped and they've got commonality. So once you start on one, it becomes easy, to replicate the work and end up churning out a lot of these small deals and without having to spend a lot of resources. So that has also come in as a huge spin-off in terms of our business model. And going forward, we think, obviously, depending on how everything goes, our involvement in this program may end up making us a regional player instead of being, a South African player as we have been before. So we're really much, quite appreciative of being involved in this program. We think it will leave a mark, that we'll always have to refer to in terms of how we do business, how we actually conduct ourselves as Nations Capital, and how we'll be formulating our business going forward. So thank you so much, to you, Tim.
Thank you very much for your remarks, Fungai, and sharing with us how you are finding additional revenue streams from the Usaid Trade Hub export firm partners in the markets beyond the mandate that we have with the Usaid Trade Hub as a transaction advisor. Let me shift back to you, Warwick. You have come up with the African Trade Platform. How has this been a feature of your business model, and how do you see that progressing into the future in terms of provision of capital to the target market that we were talking about?
Thanks, Colin. But from the African Trade Platform side, every month that goes by, I think we continue to realise the gap in the markets from a sub-Saharan Africa perspective. The requirements from sellers within the regions, the lack of understanding of international markets, where to actually find buyers. At the same time, from an international perspective, the barriers that international buyers face within sub-Saharan Africa with actually concluding a smooth transaction is huge. So the task at hand from our side is massive. It's something that's going to take a couple of years to fully refine into that automated model based on software, whereby transactions will flow smoothly from a fully automated perspective. But to say that we are getting there, we are moving forward at a rapid pace. Transactions are flowing from our side. So there's a lot of positivity around that side of the actual platform. I think if I go back to the trade finance side of it that I discussed a little bit earlier, once we've actually fulfilled that bridge of the purchase order supply chain finance, once we've actually filled that gap, it's going to open up a huge amount of trade by being able to facilitate and structure transactions within sub-Saharan Africa with the various aggregators, processors, etc., where there's a big gap that's currently sitting in the market, whereby current institutions are not funding those processing facilities or aggregators, because the current thought processes are coming from a banking mindset, where they're looking at the balance sheets of the actual entities themselves, and they're only forwarding facilities to those enterprises based on their net asset values, etc. Whereas the structure that we're looking at focuses purely on the trade. The risks are totally different. We're not looking at the actual entity itself. We're looking purely at the transaction, the product that's getting processed, and the final market itself. So it's a different mindset that we're taking to the market. And once that is implemented, it'll have a big effect on the way that transactions are actually conducted, and the flow of capital is actually released. So it's, I hope I've explained it. Just so from an understanding perspective from everyone on the group.
Thanks a lot, Warwick. I don't want this session to sound like we brought you here to sing praises of what we are doing as the USA Trade Hub. I'd like to shift the discussion now in terms of, okay, having been in the relationship with the USA Trade Hub for about a year now, seeing how the market landscape is shifting, what are some of the enhancements that you think need to be made to make this worthwhile for you to continue to grow it as a market segment? So let me start with you, Gordon, and then move on to Pokwane.
Sure.
So if we were to improve this, what needs to change, and how for it to work for you?
Absolutely, thanks, Golden. I mean, I mentioned earlier that we had received referrals from Usaid. Probably the one thing that we found, and it's one of the challenges is that it's a fairly narrow window that the Trade Hub offers, which is the way it's structured in terms of a contract to build up the relationships, etc. Something we've probably missed is interaction with the other transaction advisors or the other participants, Fungi, also with Warwick, and also with Pokwana. I do get the sense that, I think there just needs to be an appreciation. We don't actually compete with you guys. We serve a very narrow function. We match capital. We source capital for the deals that are originated. So if you have a deal that for some reason you can't put in your books because you might be conflicted, you know, by all means, we'd love to look at it and try and place that deal in the capital markets. Likewise, sometimes we come across deals, and it's actually happened in this program, where we've seen a deal where there's definitely a business there. The particular deal we're thinking of was a fishery deal. There's definitely a business there, there's a great deal, but the guys just lack that ability to make it investor ready, to make it appeal to an investor. Now, we're not corporate advisors. We'd love to contact you and say, hey, you know, we have a deal, have a look at it, meet the client. If you can add value and you think there's an opportunity here, then go for it. You know, let's get involved. We're quite happy that you take the advisory role on that deal. So I do think that between us, there probably hasn't been, I think there's mutual respect. We all know that. We've had the pleasure of working with Botswana recently. But I just think between the three of us, there probably needs to be dialogue, regular connection. How's it going? Can we assist you? We're all in this ecosystem. We wanted to work together. So perhaps we should just communicate more and share opportunities if there are. That's probably what I might say is what I thought might have worked a bit better in the process. And I certainly feel it can.
Mm-hmm. Thanks a lot. So you are putting on the table that it's well and good that we meet with the USA Trade Hub bilaterally, but there is space for us to meet as a full set of capital providers and transaction advisors to explore further synergies that we can sweat out.
Absolutely. I think your selection of capital providers was, and I'm not being, as you say, polishing marbles. I just think it was a good idea to get three completely different. You know, we sort of a certain range of the market. Botswana does her, she's got her investment thesis. Warwick has got his, and Fungai's got theirs. So I think it's quite good that there's a spread, you know. But that's what's good. You know, we can actually, and we have a unique function to play. We actually do link and interconnect all those parties as well. So I think as our comfort level grows, let's talk to each other and create more value in this engine. That's really what I'm saying.
Perfect. Thank you. I see, Mark, your hand is shot up. You have something to add in that regard.
No, look, I'd just like to add to emphasize what Gordon's saying. I mean, we are at the glue in the middle of a bunch of these relationships. We don't seek to do IMs. We don't seek to put risk capital into deals. We don't seek to do due diligences and negotiate deals. The only thing we do in our lives is we connect the parties that should be dealing with each other at the level of investor and capital seeker. So we actually serve people. You know, we actually serve the advisors and we serve the investors. That's our role. And so I think that we probably sitting in that sort of conceptually in the middle there, we probably could be useful to have greater. I mean, I completely support Gord's comment about greater dialogue. It would be good.
All right. Thank you very much. So we have taken note of that, the connecting role that we can play in terms of getting all the ecosystem players that we are in partnership with to connect and explore further synergies. Can I move on to you, Pokwane, with the same question in terms of what are the enhancements that you would put on the table for us to make and make it more worthwhile for you to grow your business in this market segment?
Thanks, Golden. I think I have expressed this to Hans and Nick in one form or the other. It's probably an expectation of deal flow, that it has been much slower than I would have imagined in our relationship. And I think for me that comes from an understanding that you probably have very strong networks on the ground. I don't know if it's a function of what may be a narrower investment mandate that we work with. So it was quite interesting to listen to the other transaction advisor. Fungai is seeing a lot of deal flow. So I think I immediately said, but where does that deal flow go? Because you know, I'm not seeing much of it. So maybe also having the universe of those transactions, so that as a capital provider, I actually take comfort from that. I am in a network, an ecosystem that is actually seeing a lot of deal flow, but I am not participating because they are seeking a certain kind of funding facilities. That also gets us thinking in terms of whether we need to think differently about how we see ourselves as an investor in this market, because at the end of the day, we want to reach this SMEs in this markets. So our ability to see the sort of the universe of that deal flow, even if most of it does not apply to us. There had been instances where we have seen that. So I don't know if it's something that is not done on a regular basis. I have seen some where there's a whole list of enterprises that are looking for funding. So my biggest gripe at the moment would be, where's the deal flow? And that also, what adds to it is also that we are on a fairly short, I would consider it a short-term mandate, whilst we've got a much longer view in the market we are serving. So in our interaction with yourself, we are working with, a date of July, and there's a lot of things to achieve in that date, which we aim to achieve over the life of the fund, and not necessarily in a year. So that in itself may create a little bit of frustration here and there to say, we are going to do this as a fund at the end of the day, but we are not going to do it by the 31st of July. And I think that is just, for us, it's kind of an alignment that has to be clear with yourself. But I think an increased deal flow is really the first thing. And I think the point I made as well, in terms of the expectation around, once we engage an opportunity that had the benefit of your transaction advisory services, how far do we go when we engage that opportunity? And I'll give you an example of an opportunity that we looked at, AfriExpo. I don't know who was the advisor, because we got the document from AfriExpo themselves, and it was before we had formalized our relationship. So we continue to engage, and there's probably, maybe our view would be that we would want to see the advisor still in the conversation. But we are not seeing that advisor. So I think for us is just understanding the extent of your involvement and what we can expect to get assisted on.
All right. Thanks a lot. In a way, the issues you are putting on the table for Kwane, they almost dovetail with what Mark and Gordon were talking about in terms of how do we have a view of because you're almost like running a relay here, where the Usaid Trade Hub is a set of export firms that we work with who have expressed an interest to access capital. Then we bring in NetCampus to help them with their financial literacy. We bring in Subvest and Nations Capital to help them with sharpening their pencils to come in front of you as capital providers. And you are saying, look, you are waiting on this other end for the button, but you want to see the one who is printing with the button in terms of what are they carrying in their hand in advance of them arriving to pass on the button with you, but also a view in terms of whether they can continue to play a function as you start interacting with the investment memo and start the negotiation with the capital seeker. Thank you. We've taken note of that particular aspect. Let me come to you, Warwick, with the same question in terms of what enhancements do you think we can make? And then from there, I'll come to you, Fungai. You have the vantage point that you are running two legs. You are running the transaction advisor leg and passing on to either yourself to run the capital provider leg or passing on to others to run the capital provider leg. Yeah. What are your reflections?
Golda, I actually share the sentiments from that side, and I think it just comes down to communication. And you know, if there has been a disconnect between capital provider and advisor, there's just a communication breakdown, which we obviously need to look into and see exactly where that issue has popped up. So it's something that I'll take forward with the team and just see exactly what's happened on that side.
Thank you very much, Warwick. Fungai?
Yes, Gordon. I think from my side, Gordon, you know, I'm looking at this possibly from a potential impact, you know, that you know, the Usaid can really register, you know, with a program of this nature. And I must say, obviously, you know, my perspective, they are dropping the ocean.
Sorry, do you want to rerun that, Fungai? We lost
the okay.
I had drop in the ocean, but I missed the first part. Do you want to restart?
Is it better now?
Yes, it is. Thank you.
So I was saying that the impact, you know, that we've registered so far, from my perspective, is a drop in the ocean compared to the potential impact that can be registered with a program of this nature. The biggest limitation that I'm seeing from my side is the narrowness of the nature of the capital that we are, the type of capital that we are lining up for these SMMEs. From my perspective, most of these SMMEs, they need preparatory type of assistance and capital before they get to the commercial, you know, type of capital, you know, that we have on the table, you know, right now. As an example, you'd find that most of the guys that we dropped off, even when we're still at a pipeline stage, these may be the guys who have a potential, but they still need some form of soft support and soft capital before we start to talk about commercial, you know, type of capital. So from my perspective, if we were to enhance or come up with a way of enhancing this program, I think there's a missing layer of the capital that is on the table. And that capital is the capital that will actually help these guys to groom them, incubate them, you know, to a certain extent, so that they are now commercially ready to access trade finance type of capital, equity capital, and debt, you know, type of capital. You know, that's from my perspective. I'm not going to repeat, obviously, the other points that were raised by the colleagues. The fact that I think the program is a little bit short, it's accelerated, especially for the type of impact that we're trying to register. I think obviously you would need a much, you know, longer period, and also the aspect of working in silos. I also agree. I think there could have been a lot that we could have achieved if working together, you know, with capital providers, you know, us as advisors and other stakeholders, you know, were to be enhanced. You know, so I think those are my 3 points.
Thank you very much, Fungai, for outlining a market segmentation issue here in terms of from the pool of deals that you are preparing for the capital providers. There are a lot that you're having to drop off because they don't fit into the existing mandate, but they are needed nonetheless. And the current offering does not cover them. And also emphasizing the aspect about coordination, collaboration amongst the pool of capital providers and transaction advisors, points that are well noted. Let me just check if Leon is in the room.
Yes, Golden, I am.
Perfect. Leon, so we hadn't quite talked to you about how your interaction with the USA Trade Hub impacted on your business model. So as you have the floor now, could you speak to the two questions? Firstly, how has your interaction with the Usaid Trade Hub impacted on your business model? And two, what enhancements can be made to bolster your market presence in this market segment?
Sure, thank you, Golden. So for us, it has been a tremendous opportunity to work with the Usaid Hub. We are an SME ourselves based in South Africa, with offices in Fourways, Centurion, and Cape Town. And we really, it is a priority for us to assist people to gain skills and knowledge on whichever level. So we work not only in IT, but like with you guys as well, on the financial sector as well. So it has really given us opportunity to look at a different market and to see different opportunities to deal with SMEs who needs financing and financial guidance on how to apply and how to grow. It has also given us an opportunity to have discussions with our own clients in South Africa, because we are not really well positioned in the African market as such, but in South Africa we are well positioned, and it has opened a door for us to also look at those opportunities in our own clients and to talk to them about the process and what we have done with the Usaid Hub, the program that we have put together. I think so that is from that side. Enhancements, I think for us, we have put the program together now, so it is now working with the Usaid Hub to get the program out there, to get people to use the program. But besides that, and I think that is one aspect of it that we do, but besides that, now that we're talking to the financial services service providers, maybe from their side as well, to get more interaction with them and to perhaps look at documenting the processes that we're talking about and adding that to the training modules so that the SMEs understand those processes as well as perhaps the portals that different service providers have available and how those work and how they should access them, as well as what they should prepare in advance before they access that portal, which could then also help the financial service providers in maybe getting more prepared applications.
Thanks a lot, Leon, for bringing in an interesting dimension in terms of the role that you are playing in terms of enhancing the knowledge and understanding of the capital seekers. That perhaps there is also even need for you to work with the capital providers to help documenting the processes so that upfront the capital seekers know what to expect when they interact with Gordon, with Warwick, with Pokwane, in terms of what's coming around the corner as part of your offering in terms of financial literacy. Again, it comes back to that issue of coordination and collaboration to explore synergies that we can harvest from this relationship in the ecosystem. I want now to be a bit more democratic and invite the audience to ask questions, but also even capital providers and transaction advisors to ask questions of each other. So if you have a question, let's take the next 20 minutes to have other questions that are not scripted, but that have arisen from your interaction within this ecosystem. So I see Gordon, you have your hand up. Please go ahead. Hi, Gordon. I think you're on mute if you are speaking.
I'm sorry, I was on mute. My apologies. No, it's actually a question for Alan Hackner. Just in terms of accessing your range of services and funds, I suppose it's quite a big topic and it'll probably take a long time, but maybe just give us a quick 3-line summary, and then, you know, it was very interesting. And I wasn't aware that there was this in the background. It could be useful, or if it's not available to us, then perhaps let us know. But given some of the deals we see our advisors structuring, it'd be quite good to know if some of these guarantee facilities could be available and on what basis they could qualify or be considered.
Thanks, Gordon, for the question. So there are a number of different pathways with regard to the guarantee facility, which is really focused on providing credit enhancement, so for debt funding. There we the starting point is really just a conversation with an investor or a fund around an opportunity, and we would then see whether or not there is just an alignment of interest, whether or not the deal really fits within our development goals and objectives. It's something which is particularly innovative, not that something we haven't done before. There's additionality in that you wouldn't otherwise be able to do the kind of investment that you are thinking of in the absence of some guarantee facility. So it's not something that you know, really, it's not purely a subsidy to an existing financing structure that you have. We then, you know, based on that conversation, we then decide whether or not this is something we want to pursue. We would then, assuming it is, we would then start a conversation with the Development Finance Corporation. So we have a key point of contact over there, and we would get their input on the proposed concept. And assuming there is fit with the Development Finance Corporation, we would then see how we can move that forward. And that process can take, you know, anything from 6 to 9 months. Given that the Development Finance Corporation is a relatively new agency, you know, while their team from Usaid has really effectively shifted over to the DFC, they've still been going through, you know, some of their own kind of learning around how they apply the DFC's criteria and approach for structuring a guarantee. But it's really, the guarantee is really process is really a conversation. So you'd set up a call, we'd have a meeting, we'd discuss the idea, the concept, and then take it forward from there. We as Usaid, you know, we would either need to have what we call, so it's what we call subsidy funding. So where we subsidize as Usaid the facility to some extent. So these facilities, typically they would have origination fees and utilization fees attached to them, but they are subsidized by a contribution that Usaid makes as well to a transactional deal. You know, typically what we look at is we look at the expected default over the life of the facility, and then based on that would come up with a fee structure and subsidy structure. On some of the other call it catalytic capital funding opportunities, looking at first loss facilities or other I guess grant funding for operational costs for setting up funds and so on, there the pathways already been through putting out requests for proposals. So we would design a scope of work. We would design, you know, we would set aside funding for a particular idea that we have around making funds available, blended funding, catalytic capital available to support funds or project activities. and then we would do that more on a competitive kind of process, so through a competitive process. And that's the route we've just recently gone out in the last couple of months, calling for proposals or expressions of interest. There are opportunities to submit unsolicited proposals as well to USAID. There are some what we call centrally based kind of projects based out of USAID Washington, local solutions, USAID local solutions. And that's how we funded, for example, the SASME Fund, First Loss Facility, where they submitted a proposal directly to Washington. Washington had funding to support innovative concepts and ideas. Washington then came back to the local mission saying they've received this proposal. We reviewed it. We said, yes, we want to go with it. They transferred the funds to us. So in that instance, it was through a mechanism which was open to receiving, call them innovative proposals. And so that is also, something to explore. Currently, that is unavailable to South Africa because that mechanism has reached their ceiling in funds for South Africa. But those opportunities are likely to arise again. But, the best way, really, the starting point, would be a conversation, reaching out to me or my colleague to me, and then we would, see what the best avenue would be. If there's an opportunity, or if not, we would say, sorry, nothing at this stage.
Thanks. Thank you.
Thanks a lot, Alan, and thanks for the question, Gordon. Other colleagues, any other questions that you want to pose? Yes, Mark.
So maybe it's useful just to get to the pointy edge end of this this conversation, I suppose, because I think to Warwick's comment, that it's a matter of communication. I mean, one of the things we could do is test whether that is in fact the case by actually having perhaps just even if it's informally done between, without necessarily, USAID can be involved, but maybe even we should just, as I'm thinking particularly of the service providers on this call at the moment, we could actually have an informal arrangement that on a Tuesday afternoon we speak for half an hour at a certain time, and we can just share what kinds of transactions we're working on, what we're doing, and how we might move the stuff from where there might be blockages to the places where they can be best served. So, for example, investor readiness, as to Fungai's point, absolutely a huge issue. And if we can, we don't do that. We could do it, but it's just not what we do. So we far rather pass it on to, to the education team or the service or one of the corporate finance teams. So my suggestion is, I don't want us to finish this conversation, Gordon, without having had that opportunity, at least just to work out amongst us how we're going to do that.
Thank you very much for that, Mark. I was actually going to get to that question, but now that you have put it on the table, let's kick it around. Pokwane, what do you think? He's suggesting a weekly check-in meeting to just touch base and see how we can collaborate. What do you think, Pokwane? Francis, I've seen your hand. I'll come back to you once we finish this one.
I'm not averse to our weekly engagements. I think it will help also if that is supported by an actual activity, not just us talking to each other. So if it's a combination of all the players that are on the call, we are all able to say, this is what I'm seeing. How can I leverage yourselves in, say, maybe either working out a good export strategy for this investment opportunity that I'm looking at, or these are 10 opportunities that I've seen. I have to say no to them because of this and this. So I think if there's an actual tangible, opportunities that we are engaging, that would be a very good interaction, so that we do not miss out on leveraging each other's, connections, expertise, and things like that.
Thank you for that, Pokwane. Fungai and Leon and Warwick, what do you think? Let's start with Fungai.
Yes, thanks, Golden. I think it's certainly a good idea, and I'm very, very supportive to it. And I also like Pokwane's suggestion that it shouldn't be, just a generic, type of a meeting. I think it needs to be informed by certain activities, certain, agendas and objectives, to the extent that maybe as a build-up, I don't know to what extent it can start as a weekly meeting, but perhaps it can start as a bi-weekly meeting. And as activities are coming and building up onto the table, then we can always make it as frequent, as it can be. That would be my suggestion.
Thanks a lot, Fungai. Warwick?
Thanks, Golden. I agree there has to be a form of communication mechanism that needs to be put in place. I would prefer a WhatsApp group between everyone, where there's constant information getting shared. But I just find when you do have bi-weekly meetings, it's too structured, it's too formal, it's too it doesn't bring that flexibility that a form of a group would bring, where there's constant communication going on at all time. But whether everyone would be happy with that, we would obviously have to put that to the panel.
All right. Thank you very much. Leon?
So thanks, Golden. From our side as well, I believe that it will be helpful. I'd love to have more interaction with everyone and to understand where we can support and where we can help to provide information to people. And also maybe to see if we can perhaps link our solution that we've built with Usaid Hub to the FSP's portals or pages, web pages or whatever, where they can also direct people to go through the course, get the information they need in preparation for their discussion with them.
Mm-hmm. Thank you very much. Hans and Nick, what do you think?
Thank you, Golden. It's Nick. I think there's definitely a scope and a need for communication and interaction amongst our financial service providers, particularly that this is something that we are driving towards to make sustainable beyond the life of the project, and that need for the FSPs to talk to each other on a regular basis and to build on one another's markets. A structured approach is probably needed to interact, and I think with time that will allow that process to evolve into a more communal relationship amongst the individuals as they get to know and interact with each other more commonly. I like the idea of having a social media WhatsApp type group where as discussions are taking place at a point in time, it can be shared and you can get responses. I think having regular meetings not too often, otherwise it becomes too structured, is also a fair point, and allowing a time that will bring people together and ensure that the knowledge that's been created is not lost, but without making it repetitive and a chore. It's a balance that will come out over time, but it needs to start somewhere. Thanks.
Thanks, Hans.
Thanks. I think, I would say that it's great to see all our partners thinking in this way. I think it gives us encouragement that I think we're going in the right direction. I must add that it's, as was mentioned earlier, this has been a relay. So to see that you're all looking forward to trying to get ways to engage better, I would think, or more regularly, I think that fits in as part of the plan. I think it's a relay race that started off and each one started off the race at a different point, and we're now almost coming to an intersection. And I think we've just reached that phase with the transaction advisors, such that this engagement, would say the capital providers are craving for, is really the next step that we're going into. And I think also glad that you're looking for regular engagements, because the thinking here is that we need to get all of us as a grouping need to engage on the various opportunities that are being worked on. So I think brilliant to say that let's meet regularly, and I think that fits in perfectly with the thinking that we have.
Thank you very much. So I think to take the discussion forward with respect to this particular aspect, we can ask to call for a first meeting. And that first meeting, to give it substance, we could say, which are the deals that are close enough to be passed on to the capital providers from the transaction advisors, and to start having that discussion to reflect on the requests that have been made by the capital providers in terms of, can we have a view of what's coming our way? So I would ask Hans to coordinate for us to have a first meeting, subject to the availability of the capital providers and transaction advisors, for us to have a first meeting and test out what would be the content of such a meeting. And then also this creation of a WhatsApp group in terms of keeping the communication dynamic, so that it's not just when we meet, but it's actually in the moment. If Warwick identifies a deal that he thinks fits very well with Bokwane, there can be that direct dialogue. Or if there's a question that is affecting the whole group, it can be posted there and people can start interacting with the issues there. Bokwane, I see your hand is up. Is that a trailing hand or a new one?
It was my initial hand. You just picked on me to respond to the point. I had a separate point to ask.
Oh, please go ahead.
I had wanted to just ask around the timelines on this mandate that we are all working on, considering that we all are involved in things that are not necessarily going to end in the next 6 months. Or in the next 3 months, and I wanted to just get a bit of an insight in terms of yourselves as a team, as what is the plan beyond, and I'm not saying commit yourself to, contracting us or anything like that, but I would appreciate just understanding, what form or what sort of support structure would exist from yourselves post the date that we are working with on this contract.
Okay, you are asking a dangerous question, Bokwane, but one that deserves an answer nonetheless. So the program as it is runs up to September 2022. And within each particular financial year, the Usaid Trade Hub financial year is from October 2020 to September 2021. We have an annual work plan that is committing to a particular set of deliverables, which has got a budget X. So our shareholder, if you like, so let me speak here in the language that you would understand. Our shareholder would expect that they would get a return on investment. And the return on investment is in the form of us meeting the performance targets that are set in the form of trade deals that we close, firms that are supported, the investment deals that are also closed. Which then informs how we structure the final year. But the final year really is a function of us producing another work plan, and halfway through, we are going to be winding down the program. So, excuse me, in terms of what happens beyond July, we cannot conclusively answer that question. let me maybe defer to Alan in terms of answering that question. If you may, Alan.
Thanks, Golden. I think the way you put it is very good, and I think it's difficult to provide you a definitive answer. As Golden said, the overall program comes to an end in September 2022, and we will receive from the Trade Hub at the appropriate time a work plan, which will be a proposed work plan to take us through to the end of that period. And obviously, the Trade Hub will wind down a number of months start winding down before the end of the program closes out. Based on what the Trade Hub is going to present to USAID as a work plan, we will then make a decision as to what we will support and how much funding we will be able to allocate to specific activities. Generally, if things are showing success, if targets are being met, if the development outcomes that we are seeking are being achieved, we would then, we would support what the Trade Hub is proposing and putting forward to us. So we can't commit at this stage, but it's really based on the success of this approach currently, which will inform how we decide to move forward.
Thanks a lot, Alan. So I think to turn it back to you, Pokwane, and the other colleagues, is help us to show return on investment to Alan and colleagues, and we make it difficult for them, if you like. Sorry to put you on the spot, Alan. Let's make it difficult for Alan by giving him a return on investment that is difficult to ignore. Francis, you had a hand up, and then I'll come to Gerrit, and then we turn it back to my last two questions that I want to direct at the capital partners. Francis, please go ahead. Okay, I don't see Francis. Gerrit, please go ahead.
I think Francis left the meeting, Golden. There was a message in the box.
Oh, I see. Thank you. Gerrit, please go ahead.
Thanks, Golden. I guess I'm allowed to ask let's say, a bit of a critical question as well. I want to ask the capital providers.
You keep your job is fine, Gerrit.
Yeah, that's part of life. My question really is the success rate on the deal notes we can expect, and I would like to ask that to the capital providers. And now I'm focusing on what's happening in Botswana. We have quite a high number of deal notes, and if I'm just looking at it from my own view, and I have been in investment committees myself. If I look at the type of the companies we have, and some of them are very small, and quite a number have no proper accounts, let's say audited accounts for 3 years. Most of them have very weak balance sheets. I know that when capital investment is sought, issues about due diligence can take a long time and can also flounder a lot of these deal notes. So my worry is really, or my question is, what success rate do you think we realistically can get? If I look at Botswana, I can see one possible deal on trade finance, and trade finance on its own is already a lot easier than capital finance. And then for the rest, maybe one, at the most 2 others. So I am a bit worried about we write a lot of deal notes. And if you look at the total amount of the deal notes, everything looks hunky-dory. But at the end of the day, a deal note is just an activity. The result is actual capital movement. So that is really my question. Thanks.
Thank you very much. I see Fungai has raised his hand. If you may lower your hand, Gerrit, so that I don't confuse it for a new hand. Fungai, please go ahead.
Yes, thanks, Golden. And I think I want to echo Gerrit's remarks. And I think, in my view, they talk to that missing part of the capital that is on the table, because what is relating to all those transactions that he says they may not meet maybe the trade finance or the capital or part of the funding that is required. You find that some of them are very good, but they need that type of capital which is more patient and supportive and not purely commercial driven. So I think I relate to what he's talking about, and that has been our experience as well. Even when we were at pipeline level, to say we had to kind of drop those types of opportunities purely because we knew that they wouldn't pass the line because they don't have certain things, but it wouldn't take away the fact that they are good deals and potentially deals that may provide a lot of impact, to the program. So in my view, and if there's going to be any going forward, I think as you pile up capital providers, I think it may be helpful to have another layer of capital providers who provide that type of capital, that is a little bit soft and more preparatory rather than commercial.
Thank you very much.
Sorry.
Yes, Warwick, please go ahead.
Thanks, Golden. I just want to respond to Gerrit's comment there, because Gerrit, I totally understand where you're coming from the perspective of sitting on an investment committee, etc. And there are steps that we're also taking from our side, which I discussed a little bit earlier about panel beating, the way that we actually look at these investments, and that's the reason that we are taking the stance where we're wanting to look at, for example, businesses in Botswana more from an asset finance perspective, where instead of looking at a capex investment by injecting debt or equity into a business, you're injecting the capex finance through asset finance and funding the business in the same way, but in a different way. So I think it comes down to how we actually look at the actual investments and how we can actually remodel business structures to actually look and get that capex into those businesses itself. So there are different structures that we're also looking at from our side, taking into account the understanding that if you had to run those businesses through the normal vanilla commercial models that you'd look at, RC committees are going to deny them based on balance sheet experience, etc.
Mm-hmm. Thank you very much. So in short, the responses we are getting to the effect that it's not straightforward. Otherwise, it would have been done before, wouldn't be needed in this space. The nature of the challenges that are in those markets are requiring remodeling to find creative ways to resolve the issues. And it's not every deal that would fit into what is being offered. But for those that fit, there are customizations that need to be made. Nick, I see you have your hand up. Please go ahead.
Thank you, Golden. I think you, in a way, have framed my response. Just many of these transactions that we are dealing with are not at that point that you can present to the capital providers, and there's a build-up, but they have got so much potential. So part of that process that we are hoping will evolve from this, and it requires more time, and it may be beyond the life of the USA Trade Hub, is to allow these transactions to have a build-up. The trade finance is an incredible tool that can be used for that, and is to begin to support transactions to grow locally within their environment. And with the support of export trade finance that is more patient and more applicable to their use, it can then be elevated to bring in that export that you would want to bring through to South Africa or the United States. So it's a build-up and it's a process to allow these small businesses to become more stable over time. I just want to add that comment, and it's not that immediate. We've identified it. We've got an immediate solution. These deals are financed, it runs through. That's not going to happen.
Thank you very much, Nick, for that additional comment. That so we are doing two things here. We are closing some transactions, but we are also building out the ecosystem. And that's not an overnight thing, but it's something that can continue to evolve beyond the life of the Usaid Trade Hub as a market-making mechanism. Fungai, I see you have a hand up. Is that a trailing hand or a new one?
No, I think it needs to go off. I don't know how it came back.
That's all right. So can I ask for us to just take 3 minutes in terms of answering the question, how should the Usaid Trade Hub continue to improve this ecosystem? What are some of the ideas that you have? So let me ask you to type them into the chat box. How should the Usaid Trade Hub continue to improve this ecosystem of capital providers, transaction advisors, financial education, the export firms in a way that makes it robust and meaningful for you as capital providers? Can I ask you to type into the chat box your suggestions? Do you prefer talking than typing? We can talk. Yes, Rick?
Golden, yeah, I mean, from my side, I think the work you guys are doing is absolutely brilliant. I like the way that you conduct everything, the way that you guys go about it. So I think we've discussed the communication side. So I think once that's in place, it'll pull a lot together. So yeah, that's my 2 cents.
Thank you very much for that. Any other views? Yes, Gordon.
Thanks, Goldman. At the risk of basically repeating the last 15 minutes of discussion, I've been busy typing my points at 9 words a minute. It's quite slow going. But essentially just creating the ecosystem, to chat into say between the capital providers is a useful one. We do find that capital raises do take a while, particularly on the larger transactions. I mean, it could take anything up to 8-9 months, which does really fit the window. We had the same experience. There were 2 or 3 very good deals that came to us from the hub, 2 in Mozambique, 1 in Botswana, but just didn't. The window of performance was a little bit tight, and so we bumped them back, but saying that they were very good deals. And I think just the hub probably needs to be mindful that sometimes a deal could take 7 or 8 months to complete. We're busy doing one in Mozambique, and fortunately, it looks like we nailed it within 3 months, but not all deals go that well. So, there might be an argument for patient capital pool to assist with making deals investor ready. But the challenge is investor readiness isn't just doing an IM. You can't just put lipstick on the pig, The business has got to function, demonstrate proper governance systems, etc. I sat on the credit committee of 3 banks in my life, Nedbank, Investec, and ABSA Barclays. And when a deal gets to that level, it has to fit the template. Us the guys just don't look at it, and you can't fabricate the deal into that space. So there is a natural transition that lots of the businesses have got to go. But we have to understand, and I noticed this particularly in Barclays, when we were dealing with businesses in Africa, that it is a stretch to make them investor ready, and that's just the nature of the work we're going to be doing. It's going to be hard work, lots of filtering, and that's just the reality. So I've sort of thrown out 3 things. But I mean, and also the ecosystem, sometimes I think the ecosystem of 12 months only is a bit harsh. So it needs to exist whether the contract remains in place or not, I think to truly pay homage to the system, we need to stay in contact and work it going forward as well. Thanks.
Thank you very much, Gordon. Other views? Okay. I don't see any additional hands. Alan, may I ask you to just share some of your reflections based on the discussion that we've had today before we wrap it up, just to get some of your reflections.
Great, thanks, Golden. I think just in terms of the this last conversation around the ecosystem and the longer-term sustainability of I think the relationship that's being developed. It's something for USAID, for our office to actually take cognizant of and to bear in mind, and to, as we look forward to developing new programs, both in the investment and the trade space, to see how we incorporate and think about these relationships that have been developed through the trade hub, so that they're not lost. I think as well, given the conversation around just seeing how this group of service providers, capital providers can improve their communication and their interaction, and based on what I was saying and earlier on around the other initiatives we have, is that there is a much wider ecosystem of investors and transaction advisors that our office is working with. And it's a challenge, I think, for myself to see how we can actually loop you into a wider group of players who are also, operating in a similar space, but, doing different things, but maybe there are also, similar challenges and lessons that can be learned from engaging with a wider group of USAID partners operating in a similar field. And that's something which I think a key thing which I'm going to take away and just explore how to widen that network.
Thank you very much, Alan. You sit at a vantage point, given the breadth of your portfolio and the different touch points that exist within your overall portfolio to the discussion at hand. So we truly appreciate the manner in which you're able to make those connections and to leverage the opportunities available in the overall portfolio and indeed within the US government ecosystem. 1 minute, sorry, I'm hung up on this. Can I ask you to type in the chat box, every individual, what is your one takeaway from this meeting? If you can just type in the chat box, what is your one takeaway from this meeting? If you are asked, where were you this morning? I was in this meeting. What is that one thing? One thing. Please type it in the chat box. Okay, so while you are doing that, colleagues, let me actually ask Hans to give us closing remarks based on a summary collection of the key issues that have come out from this meeting. over and above the ones that you're typing into the chat box. Hans, can you please do us the honors and give us a summary of the issues that have come out from this meeting?
Thanks, Golden. And thank you all for your active participation in this engagement. And I think one of the key elements that really come out, I would think strongest of all pieces that we've touched on really is around the increased engagement among all our partners. And I think what I also leave with great excitement is the fact that there is definitely a lot of areas for increased collaboration, and the collaboration cuts across all partners that we have. And I think clearly shows that we are almost at a point of intersection in terms of where the different pieces are tying up, and it's a question of how do we build them to start having a long-term and lasting impact on the ecosystem. But I think the key takeaway points I've picked up would be that one is to say that Usaid definitely recognizes the role of a private investment that it has to play in the emerging market transactions. And of course, importantly, Alan also highlighted how the credit guarantee initiatives can come in to support the developments in this sector. But importantly, one was a point of saying that for this to pick up, I think a conversation has got to be started. And I think I would say that all partners leave knowing that yes, it's the Usaid, the guarantees are available, and it's really more of a point of getting that discussion going. I think clearly also raised was among the capital providers in terms of that, yes, the traditional focus was on large transactions and utilizing limited resources for more efficiency. But I think the involvement with the Usaid Trade Hub has supported and guided our capital providers into a new market segment that was previously not being focused on. And currently, this is an area that is developing. Importantly, was also around the alignment of the objectives of the Usaid Trade Hub, one with the expectations of the capital providers and the transaction advisors. And of course, this is also a process that is evolving, and this continues to improve with increased interaction with the various teams. And this is something that will continue to develop. And I think from here, what we take would also be one of all the partners to actively build or work on building this. Importantly, is a point of saying that there's been a rethink from the capital providers on how they approach the small and medium enterprise market. And of course, one important element is that this is extending well beyond the traditional funding approach that has been implemented or practiced by the financial institutions, and adopting ways in which the capital providers can unlock new resources to support these markets with smart products, and of course technology to support the growth in the segment. And of course, one other key element was that the Usaid Trade Hub activities are supporting long-term pipeline development, and I think this was clearly articulated from the IDF perspective that yes, that there is some pipeline development work that will be resulting out of the work being undertaken by the Usaid Trade Hub. Another important point was one around the regrouping of internal resources, which is really opening the market beyond the South African market, especially when you look at the fact that the work with the Usaid Trade Hub is helping reduce some of the transactional costs, and therefore allowing room for some of the partners, say the transaction advisors, and I think this was a point highlighted by nations, looking beyond South Africa to see what other opportunities are there within the target countries or the neighboring countries. Another point highlight was that of a more regular dialogue among the financial service providers, this family, to interact more to consider the individual markets or the individual opportunities that are currently being developed. I think the one concern from the partners was around the Usaid Trade Hub timeline being tight, and with a view that a longer timing would be needed to ensure that there is full integration among the financial service providers to ensure that the good work started really takes hold or gets built firmly. I think linked to that was the need or request from all the partners, which was, I think, genuinely expressed by all partners, to meet on a regular basis. And I think suggestions were made on either bi-weekly or a more regular basis. And I think that was placed upon my shoulders to work out a way in which we get to engage, and we'll work out to set up the initial engagement And as we do the initial engagement, we'll sort of set up some form of guidance as to how we manage the engagements, both formally and informally. I think that would definitely be one that would see how best to run. And I think importantly being highlighted here was that to ensure that all partners are comfortable in terms of how they're proceeding and not feel that they are missing the point somehow within this ecosystem we're working on, to ensure that there are different, should I say, cross feeds to the various partners, and everyone is taking receiving full benefits of the activities and not feel left behind in any way. The other, of course, was touched on was around new products being created, and I think we've touched on this, and I think it was highlighted with one of the questions that part of the solution is really a focus on more focus on asset-based finance coupled with trade, and I think that talks well to the objectives of the USA Trade Hub, and I think it's really how we bring that out into practice to address this the clients that we have who are missing the access to the finance, and ensuring that the objectives of the USA Trade Hub coupled with our partners are able to address their needs. And of course, importantly, we know that the trade platform is enhancing some of these opportunities. And I think also another point raised was one of seeking, and I think this would be carried later into another perspective of thinking, looking at seeking alternative sources of funding to support some of the clients that we've engaged in the process that definitely require more patient capital that would be necessary to support these businesses to move them to the point of being able to take on more commercially oriented capital. I think also there were points raised around the need to improve the ecosystem, and I think one of the key elements around that was the regular engagement. And I think the other element was really touched on was around the time frame of the USA Trade Hub. And I think the one point that was highlighted on that was, let's all work together. If we all succeed, we should make it a little bit easier for Alan and colleagues to extend the life of the USA Trade Hub and enhance on the current activities being done to improve the ecosystem. I think, Gordon, briefly, I think those are the points I have summarized out of the discussion. Thank you.
Thank you very much, Alan. Sorry, not Alan. Hans, for your summary of the discussions. I have a few seconds to say thank you and not keep you any longer than we asked you to be part of this dialogue. Colleagues, thank you very much for your time. Thank you very much for your honest contributions. And more importantly, thank you very much for your business models that are advancing inclusive growth within the region. When businesses grow, all of us win. We win in terms of jobs being created, we win in terms of increased exports, we win in terms of business competitiveness, and we win in terms of shareholder returns, which mean different things for different stakeholders. So we salute your efforts and we thank you for braving it out there in terms of going into this market segment, which is a tough quadrant, but one that has to be solved. And if we get it right, it's one that represents high growth opportunities for our continent. So thank you, colleagues. Have a wonderful day. We shall follow up on the actions as agreed. Have a good day.